Hi, this is Aubrey Chauke. I'm a tutor for accounting, business studies, EMS, as well as research. If you're watching this, you are definitely at the right place. Please don't forget to hit the subscribe button down there, and also please encourage your friends and loved ones to also subscribe to this channel. Now, here in this lesson, we're going to be doing what we call Creditors Reconciliation, and I will start by explaining why would we need to do a Creditors Reconciliation. Now, remember, as a business, whenever you purchase, sometimes it can happen that you don't have enough cash available, so as a result you decide to purchase on credit. In other words, in Setswana we call it oreka ka sekoloto. You'll decide to buy on credit from your suppliers and promise to pay them at a later stage, right? When those suppliers are looking at you, they are looking at you as a debt, but when you are looking at them, you are looking them as a creditor. Why? Because you owe them money. So now here they're saying the following creditors ledger account of Rolex dealers. Rolex dealers in this case becomes our supplier because the ledger is prepared by us for Rolex dealers. We want to see is the information that the Rolex dealers have same as the one that we have, and sometimes it can happen that that information is not the same. Like for example, if you make a purchase or a payment after the statement was issued to you, the supplier will not be aware of that information until a reconciliation has been done, right? And also, if the supplier decides to charge you interest, you won't know until you get the statement. So here they're saying that our supplier is known as the Rolex dealers, and they're saying that this was extracted from the records of Quasi Stores. Quasi Stores refers to us as a business, and whenever you do creditors reconciliation, you need to understand who is the supplier and also who is the business. You need to be able to identify those. And here they're saying when the bookkeeper of Quasi Stores compared the statement of Rolex dealers, remember Rolex dealers is our supplier, they're saying that he discovered that there were some errors and omissions. Errors, it simply means some mistakes. It could be that we had undercasted or overcasted, or we had recorded some things by mistake, or they had recorded some things by mistake, or they had omitted by mistake, something like that. And also here, errors, remember we are speaking about mistakes, simply mistakes. It can come from both parties. The business can make error, the supplier can also make error. And it also, in terms of omissions, it means that the information was not recorded. Like I gave you an example that if we receive on the statement, we receive the statement of the on the 25th, and the transaction takes place a day after, we as a business will the supplier will not be aware of that information. Hence, when we look at that the statement, we will not see the transaction that happened after the statement was issued. Okay, so now remember, the main aim of doing a reconciliation process is to make sure that the account of the statement that comes from the supplier is the same as the balance of the account that is prepared by us in the ledger. They should all be the same. Okay, why? Because they are prepared using the same information. So here they want to correct the errors made in the account of Rolex dealers in the creditors ledger of Quasi Stores, and they also want us to prepare the creditors reconciliation statement on the 31st of March 2020, and they also want us to deal with some internal control measures when it comes to creditors. Not really a problem, but for this one I'll just discuss it. Okay, so now what do you need to do? Firstly, you need to check the information about the balances that they have. So if you look at this, you will see that they have given you the information that you need, but you also need to check if they have already entered some information for you in the answer book. Okay, and this should not really be a problem. So we're going to check if that information was already entered for us. So if you look at this, you will see that we don't, the balance is not yet entered for us. So we're going to see what is the balance of the supplier according to the ledger account. Now I want to try and summarize it this way. In the creditors ledger, our debt will increase on the credit side, meaning it can be increased, by example, when we buy. These are basics. And it will be reduced on the debit side. This can be when we pay or we get a discount, so our debt will decrease. So you need to be aware of such things. And then here in the creditors ledger, creditors reconciliation, remember this is prepared to you as a debtor, meaning that they are speaking to you at a position where they are looking at you as a debtor. So now this will be the opposite. Okay, in the statement, when you get the statement, your thing will increase on the debit side and decrease on credit side. Okay, so that's what we need to check. it will be the opposite of this. Unfortunately, the statement is in the question paper, but we can just go there and see what I'm talking about. So in the statement, according to here, if okay, this is the ledger and then this is the statement. So in other words, what I was saying was that the statement will increase on the debit side and decrease on the credit side. And if you look at this, for example, you can see we have an invoice. You see it's increasing our debt, hence I'm saying that it will be the opposite. Okay, so now the first transaction, they are saying that Rolex dealers incorrectly recorded a credit note number 112 as 50 rand instead of 450. But before we do this, let's enter the balances. So the balance according to the ledger, from the information that we have, the balance according to the ledger is 18,187. So we're going to start with the balance in the ledger. Remember the creditors ledger, the balance is 18,187 and is on the credit side. If you were not aware, it's on the credit side. Okay, and then let's check for the statement. The balance as per statement is, the balance as per statement according to here on the 28th is 21,044. So we're going to enter that balance in the statement. Remember, it's going to be a debit balance as per balance according to the statement will be on the debit side. So it's 21,044. Okay, so you will get your first 2 marks for just entering this basic information, and then from there you can just go to the journals and check what are they saying in the adjustment. So here they're saying Rolex dealers incorrectly recorded a credit note number 112 as 50 rand instead of 450. So if they're saying Rolex dealers, remember they're talking about the supply, and remember once they issue a credit note, our debt is supposed to go down. So it means that the error was done on the statement. So you'll see what they're talking about. The credit note that they're talking about here is this one here. So they've already mentioned it. Okay, so now they are saying they were supposed to record 450, but instead they recorded they had recorded 50 rand. So it means that there is a shortage of 400, so that the two can become 450, because if you look at this, the 450 has already been undertaken, you see. So we are 400 short, so it means that we need to reduce our thing by 400. So we can say debit credit note we need to get the credit note number, and this way of answering is way different from the one that we did in the last activity. So please pay attention to such things. So remember this credit note, they said it's credit note number 112 and it's going to be 400. So we'd write 112. So we'd have 112 here, 112, and then remember credit note will reduce the debt, so it will be 400 on the credit side. Okay, so now the information will balance. And then next adjustment says that Rolex dealers did not record the discount allowed on 11 March 2020. So meaning that on the statement that discount was not recorded. So we need to go to the ledger and check what is the discount. So if you go to the ledger, you will see that there is a discount here on the 11th of 250. So meaning that this payment has already been dealt with. If you check, even here it's also appearing 2,250. Okay, so we need to record that discount. That discount is of 250, so we need to record the discount. So I'll come here, I'll just use keywords that can help me to remember. So I'll just write discount, and then we would have that 250 here, and then so far we've entered what we have. And then next they are saying that the next adjustment says that invoice number 478 on 24 March was recorded as 2,128 instead of 1,228. So we need to check, where do we have 1,228? We have it here, so it means that the statement is correct, but the ledger is wrong. We have made this to be more, because remember, invoice reduces your debt. So let's check the difference. So invoice number 478 in the ledger, so we'd have invoice 478. Unfortunately, I won't have enough space to show you the calculation, but I'll do it on a calculator so that you can see. So remember, invoice number 478 here they're saying it's 2,128 minus 1,228. Now our answer here is 900, so it means that our ledger was actually overcasted by 900, so we need to reduce it. Okay, and remember, I said the ledger is reduced on the debit side, so meaning that I'm going to debit that 900 here. So we'd have that 900 here, and then you'll get your full 2 marks. But if you have space to show your calculations in brackets, remember, in my case, my pen is a bit bigger for you to see, so I will not be able to show you in brackets, but please show that. And next, they're saying that invoice number 1268 on 25 March was stationery purchased from Rolex wholesalers and not from Rolex dealers. So normally this will be an error that was done by us. You'll find out that we have recorded purchases from someone else in the books of this supplier that we are with. Remember, this one is Rolex wholesalers. We are dealing with the Rolex dealers, not Rolex wholesalers. So meaning that we need to take it out of the ledger. And if you look at this, you will see invoice number 12668. Remember, this one was also dealt with. So if you check invoice number 1268, is this one, there's 490 here. Okay, so we need to deduct it. Whenever we deduct it, we will deduct it on the debit side, because the error was done by us. And if you look at this, it's not here. Okay, so we're going to do that. So it's invoice number 12,268. So we're going to have it here. Invoice 12,268, and it was for 490. Remember, it must reduce the debt because we had recorded it by mistake. We confused the name of the supplier with someone else. Okay, so this has been recorded. And then next we can go to the next adjustment. Here they're saying Rolex dealers charge the account of Crazy Stores with interest. So remember, this interest that we are charged is from the supplier, so it is obviously there on the statement. So that invoice is this one, the one that they are talking about is this one here. So that interest is there in the statement but not in the ledger. So we can just go there and say interest. We'd have our interest, and then remember, it's going to increase this, so we'd have that 97 rand here. Okay, and then next we also want to check if some things were considered. If you look at this, we have, I think the adjustments are almost completed. They are not saying anything. Here they're saying the account was sent to Creditors Stores on 29 March 2020. So if you look at this, we have a payment that took place somewhere here on the 31st. So obviously the statement will not have that. So we need to tell the supplier about this payment. Okay, so we'd have EFT number 7929 in the reconciliation. We need to tell the supplier about that, and then we say EFT, I think it's 7929 3.5 7929, and this is for 3,500. Remember, this is supposed to reduce our debt, so it will be credited. Okay, so we'd have that 3,500 here. Okay, I hope you get my point. So now what we are going to do, we'll then check we'll then check if everything else has been recorded. Okay, so if you look at this, the opening balance was there here on the, this is the balance that they have here, it was there, so that balance will definitely be there. Okay, so that balance, we don't have to record it, it shows that we started by it. Even if you look at so that balance is there, we are sorted with that balance, there's no need for us to record it. Some of these things, they had already been corrected. Balance according to the statement 8, 9, 10, you can see it starts with that, and then also this credit purchases, so this has been considered also. If you look at the discount omitted 210, that discount of 210 is also here, you see, so it's there, so it means we are fine. This one is also there. If you check the invoice 411 is also there, 210 is there. This balance, remember we started by it, so our information is fine, right? And then if you check this 411 is there also, and then this balance also, remember it was used, so it means that up to this point everything is okay. So what we need to do is to just balance. Remember this one, we also used it, is there, right? So what we need to do is to make sure that our ledger and statement are balanced, in other words they agree. So what we're going to do, we'll start with the balance of the ledger account. So we have 18,187, would say minus 900, and then minus 490, and then plus 97. It is giving us 16,894, right? So the balance will be 16,894, right? Then if you look at this, you will see we need to transfer the credit balance as per ledger here, credit balance according to the ledger. Remember the balance according to the ledger, we have a credit balance, so it will meaning that it's on the credit side, right? We'd have a credit balance, so that 16,894 will come this side, 16,894. Now if you look at this, these two sides, they have to be equal, so we have 21,044, and also this side we should have 21,044. okay, now let's check if we add this, if they will be the same. So 400 plus 250 plus 3.5 and then plus 16,894, you see it's 21,044. So these things are both balancing. The ledger says our balance is 16,894. Even the statement will say that our balance is 21,040. Sorry, it's 16,894. So our books will balance, both the ledger and the statement, they are going to balance. So they have now been reconciled, you see. So meaning that here the closing balance on the statement will be 16,894, and then even here balance according to the ledger as we prepare the reconciliation is the same, 16,894. Hence if you check here, the debit and the credit side are also the same. Now the next question, I'm just going to discuss it. The next question, they're saying that where is it? They're saying that name 3 internal control measures for creditors. So number 1, what we can do, for every transaction that happens, there should be a source document, number 1, and then there should also be division of duties. Like for example, sometimes when it's only one person who's collecting stock from creditors, they can end up defrauding us. So if we put at least 2-3 people, there will be a rotation, and we won't have too much fraud, because when it's one person, they are more likely going to be tempted. And then the other one is that a reconciliation process should be performed probably on a monthly basis to detect if there's any fraud. Okay, so those are some of the things that you can mention for this one. I'm done with this question. If you want me to assist you with a question of your personal choice, you're more than welcome to get in touch. using the details that will appear in the description of this video. Thank you so much. God bless you. Shalom.